If you think you know everything about XRP, think again. A major update from Franklin Templeton has just dropped, and almost no one noticed it. This update could change the way big investors view XRP, and it may even impact the market in ways you weren't expecting. In the next few minutes, you'll understand why this news matters, yeah, what it means for the price, and how it could reshape investor confidence. Stay focused because missing this could leave you behind. Recently, Franklin Templeton, one of the largest and most respected investment management firms in the world, released an update that quietly affects XRP investors. Most people did not see this announcement, yet it carries weight because Franklin Templeton manages billions in assets and often sets trends for institutional investment. This update is not just routine financial information, it provides insight into how a top firm is evaluating digital assets like XRP. Understanding their approach helps explain why XRP has been gaining attention in larger financial circles beyond just retail investors. The update highlights several key points, starting with liquidity and institutional access. Franklin Templeton has been evaluating how XRP can be integrated into their financial products while ensuring stability and compliance. They are looking at XRP not only as a speculative asset, but as a digital payment solution that could offer faster and cheaper transactions compared to traditional banking methods. This perspective is crucial because when a major investment firm considers a cryptocurrency for mainstream use, it signals a growing confidence in its infrastructure and utility. For many investors, this could serve as reassurance that XRP is more than a short term trend. Another element in the update is risk management. Franklin Templeton explicitly mentions regulatory compliance and oversight as part of their evaluation. They are monitoring SEC updates, market trends, and XRP adoption in various financial services. By approaching XRP in this structured and professional way, the firm reduces the risk typically associated with volatile digital assets. This is significant for everyday investors because it shows that major firms are approaching XRP carefully, which could stabilize investor sentiment and reduce panic selling during price fluctuations. The update also touches on performance metrics. Franklin Templeton is analyzing how XRP performs relative to other digital assets in terms of transaction speed, cost, and adoption rate. They are especially interested in XRP's unique consensus algorithm and how it enables faster cross-border transfers. This is not just technical jargon. It directly affects XRP's perceived value. If large financial institutions recognize these advantages, it could lead to broader adoption and potentially higher market capitalization. Understanding these metrics helps investors make informed decisions based on utility rather than speculation. Importantly, the Franklin Templeton update includes subtle commentary on market timing and strategy. They are cautious but optimistic, suggesting that XRP could see significant attention if regulatory clarity improves and adoption in institutional transactions increases. They are not promising guaranteed gains, but the emphasis on structured evaluation and strategic positioning shows that XRP is being taken seriously at high levels of finance. This is a message often missed by retail investors who focus solely on price charts or social media hype. Recognizing this perspective allows investors to align their expectations with institutional sentiment. The update indicates that Franklin Templeton is considering XRP for specific portfolios where digital asset exposure is beneficial, but risk is controlled. This implies that large scale purchases or partnerships may be in progress, which is often a precursor to price movement or wider market recognition. When an institution of this size signals interest, it can influence other firms and investors to pay attention, potentially creating a ripple effect in market sentiment. For anyone holding XRP, this is a critical insight because it suggests that market dynamics are being influenced not just by speculation, but by serious institutional interest. In conclusion, this update from Franklin Templeton is a reminder that XRP is not just a digital token for small investors. It is being assessed seriously by one of the largest investment firms in the world, with attention to compliance, utility, and strategic positioning. While most people miss this news, understanding its implications is key to evaluating the long term potential of XRP. Keeping an eye on how institutional players like Franklin Templeton interact with XRP can provide a more realistic view of the market and help investors make more informed decisions. Following the Franklin Templeton update, the attention on XRP is slowly growing among investors who usually follow institutional moves closely. What makes this significant is not just the update itself, but the way it frames XRP as a serious digital asset with practical use cases. Many people think of cryptocurrencies as purely speculative, but this update emphasizes utility and adoption, showing that XRP is being considered for real world financial applications. This perspective shifts the discussion from short term price movements to long term value, which is exactly what professional investors look for. Understanding this shift is crucial for anyone planning to hold or trade XRP in the coming months. One major takeaway is that institutions like Franklin Templeton are focused on the scalability of XRP. Scalability refers to how well a network can handle a large number of transactions without slowing down or increasing costs. For XRP, its blockchain infrastructure is designed to process thousands of transactions per second, which makes it appealing for institutional use. The update suggests that this scalability factor is a key reason why top investment firms are considering XRP for larger portfolios. This means that XRP's technology is not just innovative, but also practical, giving it an advantage over many other digital assets that struggle with transaction speed and cost. The update also sheds light on liquidity concerns. Liquidity is the ease with which an asset can be bought or sold without affecting its price. Franklin Templeton is examining XRP's market liquidity to ensure that large transactions can occur smoothly. This is important because when a firm of this size is involved, even small liquidity issues can create market fluctuations. By ensuring XRP is liquid enough for institutional trades, the update indirectly signals that the token is becoming more reliable for larger investments. For retail investors, this is a positive sign because liquidity helps maintain price stability, reducing the risk of sudden drops caused by large sell offs. Another critical point highlighted in the update is regulatory monitoring. XRP has historically faced scrutiny from regulatory authorities, and this has affected investor confidence. Franklin Templeton's evaluation includes a careful review of legal developments and regulatory clarity. This shows that top firms are willing to engage with XRP only when compliance and risk management are properly addressed. The emphasis on regulations also highlights a key lesson for individual investors. Regulatory clarity can significantly impact XRP's market value. Being aware of these factors allows investors to understand market movements beyond simple speculation, giving them a more grounded approach to trading or holding XRP. The update touches on partnerships and adoption trends. Franklin Templeton is monitoring how XRP is being used by payment providers and financial institutions. Wider adoption in real world transactions increases XRP's credibility and market relevance. For example, cross border payments using XRP can be faster and cheaper than, traditional banking methods. If more firms adopt XRP for such transactions, it could increase demand and create long term growth opportunities. This demonstrates that XRP's value is not solely based on investor sentiment, but also on tangible use in the financial ecosystem. For anyone invested in XRP, understanding adoption trends is as important as tracking price charts. Furthermore, the update suggests that strategic timing is key. Franklin Templeton is not rushing into large investments. Instead, they are analyzing the market carefully and looking for the right entry points. This measured approach indicates that, yeah, institutions view XRP as a long term play rather than a short term gamble. Retail investors often react emotionally to price swings, but observing how professional firms operate can provide valuable lessons in patience and strategy. Understanding these behaviors helps investors align their expectations with how major players interact with XRP, potentially reducing impulsive decisions that can lead to losses. In addition, the update indirectly shows confidence in XRP's underlying technology and team. Franklin Templeton's assessment considers not only the market, but also the sustainability of the network and its leadership. This reinforces the idea that XRP is being taken seriously at high levels of finance and is not merely a speculative token. For investors, this insight can build confidence knowing that the token's value is supported by technical strength, adoption potential, and institutional interest. Overall, part two emphasizes that, yeah, the Franklin Templeton update is more than just a news item. It is a window into how large institutions view XRP. It highlights scalability, liquidity, regulatory compliance, adoption trends, and strategic evaluation, all of which are crucial for understanding XRP's market potential. For anyone holding XRP or considering investment, analyzing these factors provides a clearer picture of what may drive long term value and how institutional behavior can influence the market. Staying informed about such updates ensures that investors are prepared for both opportunities and risks in the rapidly evolving world of digital assets. With the Franklin Templeton update now on the table, it's important to explore how this could influence XRP's price and overall market sentiment. While the update itself doesn't provide exact numbers or guarantees, it gives strong clues about potential future movements. Institutional interest is often a precursor to market growth because when large firms evaluate an asset seriously, it signals confidence and can encourage other investors to follow suit. This influence is sometimes slow but powerful as it affects both the demand side and the perception of legitimacy for the asset. Understanding this mechanism helps investors see beyond daily price fluctuations and focus on broader trends that could drive long term gains. Price projections for XRP are always a topic of discussion among investors, and this update has sparked new conversations. Franklin Templeton's attention to liquidity, scalability, and regulatory compliance suggests that they see XRP as a viable asset for integration into larger portfolios. This kind of validation can lead to increased buying pressure from institutional investors, which in turn can positively affect the market price. While retail investors may not have the same buying power, their reactions often amplify trends started by institutions. When investors recognize that a respected firm is paying close attention to XRP, it often triggers a sense of urgency among smaller investors, which can influence short term market behavior. Market psychology also plays a key role here. The update serves as a subtle signal that XRP is being taken seriously at higher levels of finance. For many investors, this psychological factor is as important as technical or fundamental analysis. When respected institutions express interest, it creates trust in the market, reduces fear, and encourages engagement from participants who may have previously hesitated. This trust can support price stability and even gradual growth as hesitant investors start participating more actively. Understanding the psychological impact of institutional endorsements can help XRP holders anticipate market reactions beyond simple supply and demand. Another potential trigger for growth comes from adoption trends highlighted in the update. XRP's ability to facilitate faster and cheaper cross border payments is increasingly recognized as a valuable feature by financial institutions. Franklin Templeton's evaluation emphasizes the token's practical applications, which can lead to wider adoption if more firms decide to integrate XRP into their payment systems. As adoption grows, the token's utility increases, which can naturally attract additional investment. For holders, this suggests that XRP's price is influenced not just by speculation, but also by real world use, making it a more resilient investment over time. Regulatory clarity is another factor intertwined with price potential. The update reflects that Franklin Templeton is closely monitoring the legal landscape surrounding XRP. Historically, regulatory uncertainty has created volatility, but when major institutions show confidence despite these uncertainties, it signals a level of preparedness and risk management. Investors can interpret this as a stabilizing factor where growth may occur once regulatory hurdles are addressed or clarified. This perspective encourages long term thinking rather than reacting to short term fluctuations, which is essential for strategic XRP investing. Strategic positioning by Franklin Templeton also impacts potential price trends. The update hints that their investment approach is measured and calculated, which is typical of large firms managing significant assets. Unlike retail investors who may react impulsively, institutional buying is gradual and can create steady upward momentum over time. This controlled entry into the market often prevents sudden price spikes or crashes, contributing to healthier growth patterns. For XRP holders, understanding the strategy of institutional participants can help align expectations with realistic outcomes rather than chasing hype driven price targets. This update serves as a reminder that XRP's future value is influenced by multiple interrelated factors: institutional confidence, adoption rates, technological efficiency, liquidity and regulatory clarity. Each factor alone has significance, but together they create a more comprehensive picture of market potential. Observing these factors helps investors make informed decisions, recognize opportunities, and avoid being caught off guard by unexpected market movements. While no prediction is guaranteed, keeping an eye on these trends can guide thoughtful decision making and reduce emotional reactions in a volatile market. Overall, part three emphasizes that the Franklin Templeton update is more than just news. It is an indicator of how XRP might perform in the coming months. By understanding institutional influence, market psychology, adoption trends, and regulatory factors, investors can better evaluate the potential for price growth and market stability. Recognizing these elements allows XRP holders to navigate the market strategically, with awareness of both risks and opportunities that may emerge from the broader financial ecosystem. Looking at the broader picture after the Franklin Templeton update, it's clear that several opportunities could arise for XRP investors in the near future. One of the most important opportunities comes from increased institutional involvement. When a firm like Franklin Templeton signals interest, it often encourages other large investors to take a closer look. This type of attention can create a chain reaction where adoption and investment accelerate in a structured way. For XRP holders, this is not just speculation. It is an indication that the market is evolving and the token is gaining credibility at higher levels. Recognizing this potential early allows investors to, position themselves strategically rather than reactively chasing short-term trends. Another opportunity comes from upcoming adoption catalysts. XRP is being evaluated by banks and payment networks for cross border transfers. And as these pilot programs expand, demand for XRP could increase. Unlike many cryptocurrencies that are primarily traded for speculative purposes, XRP has a tangible utility which provides a stronger foundation for growth. The Franklin Templeton update suggests that major institutions are, taking this utility seriously, which could lead to broader acceptance and integration. For retail investors, understanding these developments can help frame expectations about potential price growth in a realistic way. It's not about instant gains, but about strategic positioning for long term benefit. Market timing is also a crucial factor highlighted by the update. Franklin Templeton is approaching XRP cautiously, evaluating risk and regulatory clarity before committing large scale investments. This careful strategy reflects a broader principle. Major firms often influence the market indirectly through their measured actions. For investors, the lesson is that patient and informed decisions are more likely to succeed than impulsive trades based solely on hype. Observing how institutions interact with XRP allows retail investors to better anticipate market shifts and respond strategically rather than emotionally. The update also emphasizes XRP's technological advantages. Its fast transaction processing, low cost, and ability to handle large volumes make it appealing for financial institutions. When top firms assess these factors, it demonstrates that XRP's value is not only speculative, but also functional. Increased awareness of these strengths can attract additional interest from institutions and retail investors alike. Over time, as more entities recognize the practical benefits of XRP, it could lead to wider adoption, creating additional demand and potential market growth. This is particularly important for long term investors who want to understand the drivers behind XRP's success beyond short term price movements. Furthermore, the update hints at potential partnerships or collaborations in the near future. Financial firms like Franklin Templeton are constantly exploring ways to integrate digital assets into their operations, and XRP's design makes it a suitable candidate for such initiatives. While specifics are not disclosed, the possibility of partnerships with payment providers, banks, or other financial institutions could create new use cases, enhance market perception, and increase liquidity. For investors, staying informed about these developments is key because partnerships often serve as catalysts for price movement and adoption in the digital asset market. Investor strategy also benefits from understanding these institutional updates. Franklin Templeton's approach highlights the importance of risk management, regulatory awareness, and strategic allocation. Retail investors who adopt a similar mindset can better navigate volatility, recognize opportunities, and avoid impulsive decisions driven by fear or excitement. By following trends influenced by institutional behavior, investors gain a perspective grounded in real world dynamics rather than just speculative chatter. This understanding can help align investment decisions with long term goals, improving the likelihood of consistent outcomes. Part four underscores the importance of perspective. The Franklin Templeton update demonstrates that XRP is being assessed in a professional, structured, and cautious manner. And this approach offers insights into how the market may evolve, what factors could drive adoption, and how investor sentiment may shift over time. For those holding XRP, being aware of these dynamics provides an advantage in evaluating both opportunities and risks. By focusing on institutional validation, adoption trends, technological advantages, and strategic timing, investors can approach the market more confidently, prepared to make informed decisions rather than reacting to headlines or social media speculation.